everybody? I hope you all are doing well. We'll get getting started here in about a minute. Got about 30 of you in here before we get started. If you all can just do me a favor, like the stream. Maybe say hello. I'd love to hear from you on this fine Saturday morning. Jamie, good morning. Morning, morning. Let's get things going. Good morning, good afternoon, good evening, ladies and gentlemen. Wherever you are in the world, thank you for tuning in. Greatly appreciate y'all being here, and it's going to be a great stream today, I can tell you that. When I was thinking about what kind of content I wanted to put out this week has provided some really great weekly templates. Not that every week doesn't provide good weekly templates, but this week gave me an opportunity to look for a very specific set of templates that are presenting based off of the opening range, giving really great Wednesday and Friday trades, and we're going to be going over those, and I'm going to explain a little bit more about the opening range and my mindset when I come into each day. If you've watched any of my live streams, you've probably heard me say it over and over again. Things like, if the breakout has succeeded, is it going to fail tomorrow, or is it going to continue to succeed, and things like that. So before I continue this, of course, as always, I do have to say, this is not financial advice. I'm not a financial advisor. The information on this channel is provided for education, informational purposes only, without any express or implied warranty of any kind. Pause the stream, read this, that way you know this is not advice. This is all for educational purposes only. Awesome. So, a little bit about mindset, all right? In my live streams, you all have seen me and heard me say things like, okay, we have an opening range breakout, and then I say, well, tomorrow I'm going to frame my day, and I'm going to see, is the breakout going to succeed, or is it going to fail, and then go to the other side of the range? Like, those are kind of the dialogue that I'm always using. But why? Why do I think of like that? Why do I frame the day and frame the week and things like that, looking at the opening range? So up here on the screen, as I'm going through this, if I ever put my face in the way, just make sure to start yelling at me in the chat, and I will get it fixed ASAP. All right. So if you're looking at this, I have this. This is from June of 2013 is when I made this slideshow. That's where this is from a previous YouTube video from way back when. But nothing changes. Nothing is ever going to change. The opening range for the week, the opening range for the day, like those times and things like that are going to create a range. And then throughout the day and throughout the week, the breakout is either going to succeed or it is going to fail. And based off of that mindset, you can look for templates setting up the week and also the day. And what's cool is if you look at this slideshow, this is, like I said, from June of 2023. This is the opening range for the year from last year, right? This was the January high and low, and then coming into the new month, right? Breakout, pullback, and then that template played out however it did. Same thing for the week. This template looks mighty familiar, kind of like what we saw this week, right? We had a very consolidated week. We got a breakout to both sides of the week, and then a trending market to the downside, and there was even a little bit of a Friday, I think that's Friday, reversal back up towards the opening range low. It's very blurry. I think it might just be the slide, EJ. It's okay. On the next slide, everything's going to be a bit more clear. This is a very broad range sort of thing. All right. So look at this template for this week and then looking at the day as well, right? So we've got the Asian range and look at the similarities to the day and to the week. Opening range for the day, Asian range, and they have spiked both sides of the range. And you can see this was a good Friday template, just like we saw on a lot of pairs this week. They've spiked both sides, pulled back, and then coming into probably the New York session, the breakout of the opening range at the low of the day has failed, maybe even the low of the week, and then it has gone and trended for the rest of the day. Like I said, this is from all the way back in 2023. Nothing ever changes. So let's come down. This is that tips and tricks slide that we know and love. I'm going to zoom out so everybody can see it. And I've readjusted it so that way I don't screw up the numbers again. Number 6 and number 7 are going to focus mainly on the Wednesday, Thursday, Friday templates, looking for trend trades and looking for reversals. Narrow it down just like that. Number 6, 3 drives out of the opening range, looking for reversals. I could even add to this and say if we have volume trapped at the high or the low of the week on a Friday, looking for a reversal based off of framing the day if that presents on that pair. Number 7, if there's only 2 drives outside of the opening range on a Friday, there's a probability of a trend trade. Now, I could even narrow it down even further and just say, hey, if we have a succeeding breakout on a Friday, frame your day and then look for that setup for the continuation of the trend, like I said, if it presents in your session. But 1 through 5 is all going to really be focused on Monday, Tuesday, Wednesday. And I have framed it out so that on every single scenario, I have an idea of what could happen on the following day and exactly what to look for. So number 1, market close as an opening range, or close outside of the opening range on a Tuesday. So that would be like an opening range breakout. Now, on this Tuesday, you can see they closed back up on the inside of the range. So, like number 2, if market closed as a failed breakout on Tuesday, the probability of reaching the under end of the opening range increased significantly. So, the market has broke out on a Tuesday. The breakout has failed. They've made a higher high on the inside. Probability of reaching the other side of the range goes up. And I can look for a trend trade back up through the high of the week if that presents in my session. In this case here, it did do that. It also, on that Tuesday, spiked both sides of the opening range, which is also one of the tips and tricks from this slideshow. If Tuesday hits both sides of the opening range, potential for parabolic trend trade increased significantly. So once again, I have 2 different indications from this template to go long on the following day, as long as when I frame my day, that makes sense. All right, I'm working into it. All right, we're starting off small, and I'm building up to going over what has happened throughout this past week to give you a better understanding. If the breakout on Tuesday closes 3 levels of rise or fall outside of the opening range, potential for reversal throughout the week increase significantly. And remember, this is that one that I kind of talked about I'm not really a huge fan of, where Tuesday maybe closes way outside of the opening range as a massive breakout. And then over the course of the week, they could pull back, like pull back 1, pull back 2, pull back 3, maybe for Friday to go back up. Wednesday, a lot of times, can become very choppy and things like that. So I'm not really a huge fan of that template, but it does show up, and I want to be aware that it exists. So let's come down. Let's start talking about the week past. I'm going to say hello to all y'all one more time before I continue and ask, how you all doing? How was your trading week last week? Let me know. Did you all get chopped up? Did you see things with clarity? Maybe the videos, the live streams from last week were helpful. I would love to hear those types of things. And I'm going to continue on. Let's see. So, tips and tricks, number 1. This was from the last week on the EURUSD. This is a 15-minute chart. And I've got a few things that are important highlighted. So I'm going to stay on this slide for a bit so we can really focus on all of the details. EURUSD 15-minute chart and market close on the outside of the opening range on a Tuesday. Probability of Wednesday continuation increased significantly unless that breakout fails on Wednesday. So we had a breakout, a failed breakout of the Monday high, and they've closed back down on the inside. So actually, this is tips and tricks number 2. Failed breakout at the high of the current week. All right. Now, after this failed breakout at the high of the current week, we also had a large pumping day on Monday. and a day that has attempted to trade higher first and then closed below the open of that day. This was a lower low back down on the inside of the current week's range, a break-in structure back down to the low. So, categorically, this is considered to be a first red day. They've also put in a lower low. They have closed less than 50% of the dump, which gives us plenty of space to fall back down. So what do I do next? I mark off my end of day consolidation. People always ask, what is the end of day consolidation? What could it be considered? I think in the most simple terms, just think of it just like, Stacey Burke talks about Fridays, the closing week or closing range for the week. You could think of the end of day consolidation as like the closing range of the day. And then Asia is your opening range for the day. So if we have the closing range for the day, end of day consolidation, and then the opening range for the day breaks out of that, a couple things should be going through your head if you're trading Asia. Will the breakout succeed or will the breakout fail? And at this point, I could tell you, when you start thinking about breakouts, I want you to data dump everything. Just data dump everything. When you're talking about this system, let's just data dump everything real quick and let's just focus on the mindset. Is the breakout going to succeed or is it going to fail? And then using timing and framing the day to figure out which of those scenarios it could be. All right, so end of day consolidation, closing range, Asian range, opening range, they break out of that closing range. Is the breakout going to succeed or is it going to fail? Asian range, they break out in the gap time and come down into the London session and continue down, filling all of that space and then triggering the previous day's low from basically Monday, right? So when we trade it all the way back down to the low of the week. We have already executed the trade, the first red day. We had space to fall. The trade was in Asia. The trade was in London. And they hit the level that has completed the pattern in London. Why do I tell you this? If I am going to look to take a trade, I am trying to take a trade from an area in the chart back down to a level or as a range expansion opportunity. So if this market would have broke out, pulled back, and continued, this could be a range expansion of the week's range. However, if the breakout fails and my daily range is failing, might want to be very cautious about trying to take a continuation trade back down to the low as a low-hanging fruit continuation. The trade already happened in Asia and London. So let's look at some more details. The opening range formed on Monday. Monday was the large pumping day. I'm now identifying the first red day. Tuesday's breakout of Monday's high has failed. Tuesday was a first red day. Tuesday has a lower low on the inside, so one of the preferences we like to see. Wednesday, the Asian range broke out of end-of-day consolidation. Gap time, opening range breakout coming into the London session. All of those things are great, but how do you actually enter into this market? Let's take a look at the Asian session first. We already know that the 15-minute chart is making lower lows and lower highs. Good. We can put a little check next to that box. We can 2 thumbs up, right? This is the Asian session 1-minute chart of EURUSD if you're just tuning in. So that means that I am looking for a sell high opportunity unless the breakout of the end of day consolidation fails. So as long as that breakout continues to succeed, I can look for my entry criteria down on a lower time frame to find that trade based off of the larger trade setup that we've already identified coming off of Monday and Tuesday. So the 1-minute chart, I am now looking for my entry criteria. They've made a higher high prior to the Asian session on the 1-minute chart. And then they have came down and broke structure to the downside. That is the first step of my entry criteria, the lower low on the 1-minute chart. Then I need 3 pushes back into the high, and I use one of my 3 push variations. And on this 3 push variation, you can see that the candles get really small. They burst up once, they burst up twice, and then they end this move in a 1, 2, 3 to the high, giving me that 3rd push. And within this 3rd push, we have an up, a down, an up, and then the down. This is the neckline of that M. They engulf it, and that should be my first entry based off of actual criteria for entry. All right. Yep, my face is in the way. So that's good. That's my first entry. Now, let's say that I've missed that first entry. They come down and they make a lower low once again. Once they make a lower low, I look for 3 pushes. So maybe I've missed my first entry, no big deal. And they slam it back up push 1 and 2 and 3 back up into the high and give another descending triangle. This kind of triple top pattern, and it engulfs that neckline down, giving you the opportunity for follow-on entries. And once again, they continue to give you opportunities for entry if you've missed either one of these. They come down and makes a lower low and starts a stair-stepping pattern back up into the high, 3 pushes, and gives the exact same pattern once again. Push 1, 2, and 3, descending triangle, triple top, and an opportunity for follow-on entries again. So there was 3 opportunities in Asia to enter in as a trend trade, a part of that larger first red day sort of scenario. The breakout of the end-of-day consolidation is succeeding. We are succeeding in that closing range breakout and forming the opening range for the day. So that's the Asian example. Let's come down to the London example. Make sure my face is not in the way. Everything's good. So this is the London 1-minute chart. Remember, 15-minute chart, still making lower lows, lower highs. And the breakout of the opening range for the current day, Asia has succeeded. Now coming into the Asian session, or the London session, excuse me, I am looking for a trend continuation because the level has not been hit yet. The low of Monday has not been hit yet. The place where the pump began has not been hit. So I can continue to look for follow-on opportunities. There is a high formed in the first hour of Asia. They make a lower low, and it consolidates and comes out of that consolidation in a burst, and a 1, 2, 3 for that final third push to the high. They do a 1, 2, 3 to the high, which in my mind, my belief is that there are traps above push 2, and people are now buying at the worst possible place of the chart, which is very well illustrated in this example. There's an up, a down, an up, and an engulfment. Now, this trap doesn't mean anything unless they don't let people out of their longs. So I'm talking about my psychology, my mentality of people being caught in this up move, and it proves it. So if I go short on this candle based off of entry criteria, we've made a lower low, giving me 3 pushes back into the high. We've got people trapped in that third push to the high and in that second push to the high. I enter in and I see people they're caught, right? They're not letting them out. There's a pin hammer, an up, a down, an up, and then an engulfment. This all looks really good. So I can get in here and I can get in here. I can add in and then let this follow through, back down through towards the low. This all looks really good. So this is a great London example as well. In this illustration, I've also illustrated that I'm going to put my stops above push 2 because that's where I believe people are caught. So I get in here, I put my stops above push 2, and I can allow that trade to then play out. All right. So let's continue on. Let's come down to this example here. Let me get this all set up. Give me 2 seconds. All right, so looking at this example, this is a low of week reversal coming off of Friday. So we had this Asian or London trade, and then now this is the trade that I actually took on EURUSD on Friday. Looking at the Wednesday, Thursday, Friday template, this is a 1-hour chart of the EURUSD. And this level down here is the opening range for the week. So they broke out on Wednesday and the breakout failed. They tried again on Thursday and that breakout also has failed. They tried again on Friday. So they have now hit the low of the opening range 3 times. If I was going to look for a range expansion of the opening range, I would have been looking for them to close outside, pull back, and then continue as an opening range breakout. That was not happening. It wasn't succeeding. The opening range breakout for the week was not succeeding. Instead, they've hit the low of the opening range 3 times for the week. We are at the low of the week, and they have volume caught down low, and you can see them trading down into the low of the week. This is Asia, this is London, and this is New York. So this is the low of Asia, this is the low of London, and they have traded down through that, and then we're going to go down to a lower time frame to figure out what sort of pattern could have helped you or assisted you in getting into this market. I'm going to move my face for 1 second so we can look at this example. So this is the 1-minute chart of EURUSD on this day. The first hour created a high and a low. It also created a tightly wound consolidation. This separator right here is the new hour, the 9 o'clock hour. 9 o'clock spikes the high, spikes the low. 10 o'clock, the news has opened up. All right, this is the low of the Asian range, the opening range for the day. That's that red line right here. So 10 o'clock spikes back up into the opening range for the day. And we are also back up on the inside of the opening range for the week. News opens up. This is actually 7 minutes after the news. So if you're thinking about the midpoint of a 15-minute bar, time rotations, things like that, 10 o'clock opens up, goes vertical, brings us back up into the consolidation area or the breakout area, and we pull back in 3 pushes, give a little W, and they engulf for the first entry, and then there is the W again, and an ascending triangle for the follow-on entries. But thinking about what pattern this is, let's look at this pattern. Now, this pattern formed over the course of 2 days. Spike the high, spike the low, consolidation in the middle. So they've spiked both sides of the range, and then they start to ascend and give parabolic channels to go vertical. That took 2 days to form. 2 to 3 days to form, right? So, but this pattern, because the markets are fractal, we get the same patterns on a lower time frame, but just far more frequently. So looking at this pattern, it's the same exact scenario. This is a parabolic pattern. This is a spike the high, spike the low, channel in the middle to go vertical, just like we can see over here. We got base 1, 2, 3, 4. This could be like base 1, 2, 3, and 4. Back up to the high, just on a lower time frame. And this is a little bit of dialogue for you. First hour created the high and the low. The second hour has spiked the high and the low, though we had news at 10. And then 7 minutes after the news, which is where I look to take my first bounce trades, first bounce entries, we got that W and that ascending triangle to go long. So this was a beautiful trade on EURUSD. Did any of you happen to take this trade as well? This is just one example that we're going to be going through, but I think this is great. The template was very clear for the week as well as for the day. Everything lined up very, very well. All right, so let's take a look at Wednesday, Thursday, Friday trend trades. This is gold. This is a gold opportunity. And it's actually a very similar template to what we looked at just now on the EURUSD, except the scenario has just changed slightly. Instead of looking for a reversal, we were looking for a trend trade opportunity. But why? Why would we look for a trend trade? One might be able to argue that there is volume trapped up high. Someone could say, hey, this is breakout, and they've got people going long, and this is going to reverse. Yeah, that could be very sound thinking. It really could. However, if we are looking at a range expansion of the week, and this market is now doing an expansion, and you try to short this, they might catch you. So let's look at all of the examples of why you should not have been looking for a short opportunity on this pair. The market only does 3 things: breakout, trend, breakout, reverse, or stay in a trading range. This has not stayed in a trading range. They broke out of the opening range for the week on Thursday and closed outside of that range. So as of right now, this is just a breakout. We have breakout trader stops down here that they are still throwing monopoly money. They have called all of their friends and told them that they are going to buy a Lamborghini within the next day or so. And they put their stops to break even, expecting this to continue to go higher on the next day. But the market doesn't like to just let people win. They have to come back and get the money so that they can then continue. So this was a higher high, right? They've made a higher high, break of structure, maybe even break in structure. And that sends the market into pullback mode. And they do a 3-push pullback. Look at the candles. Push 1 and 2. And then that third and final attempt, the biggest candle on the entire chart, then reverses immediately and goes right back up. Looking at this day in particular, opening range for the day, they have spiked down outside of the opening range. They have spiked up. They have made a higher high. And they have pulled back 1, 2, 3, right back down to the opening range high. The market only does 3 things on the day and for the entire week as well. The market has broke out and pulled back for the week, The market has broke out and pulled back on the day itself. This is a 1-hour chart. So we are proving that the market is breaking out, pulling back, and continuing to trend. It is an opening range breakout, and we are looking for range expansions of the week. So let's go down to a lower time frame. I come into the New York session. I have all of that information already. This is not hindsight. Well, it is in hindsight because I could already see what has happened on Thursday, and I could already see what happened in Asia and London coming into New York. The thesis should already be formed. So in the first hour, they have created a high and they have created a low, exactly like the EURUSD did. In that second hour, they have spiked the high, they have spiked the low, and the 10 o'clock news opens up on the outside of that consolidation and goes vertical back up into the consolidation. This is the high of the Asian session, proving to me that this could be a high probability breakout pullback for a trend trade, for a range expansion of the entire week's range to the upside. Same exact thing as EURUSD, except EURUSD was a reversal off of the low of the week. And this was a breakout pullback trend trade from this week to do a range expansion of the week. Breakout pullback, they pull back up into the range, ascending triangle for entry opportunities, and entry opportunities, continuing that trend back up. Now looking for range expansions of the week. This is my entry criteria up here. News at 10, ascending triangle. They spiked the low, they spiked the high, they made that higher high, they pulled back. You can even see the 3 pushes outside of consolidation. They drive into the low, they drive into the low, they drive into the low. There's the W down low, it engulfs, and then the ascending triangle for you to actually get in with the assumption or the belief that the opening range breakout is succeeding not only for the day, but also for the week and looking for range expansion opportunities. This strategy involves a lot of moving parts. No, none of it is difficult. Just look at it. Yes, I am explaining it as if it has multiple moving parts because I am trying to explain the entire mindset overall. The hindsight, just like Vince said, brings you to foresight. You see it over and over again. You study the patterns over and over again. And all of my little explanations, and it seems kind of complicated, but I promise you it really is not. Once you understand the mindset and what the market is truly doing to people when they create these patterns, it becomes very, very clear, and you start to trade with a new sense of clarity. All right, you all about to get some ads, and I'm going to skip them for you so we can continue on to this next slide. All right, so oil. If you all are looking at your charts right now, this might be a really good time, but I've also got it up here if you want to go and compare. Compare and contrast oil and the CAD. Why? Now, I know that oil and CAD are like correlated somehow, some way. That is not what I'm referring to. I could care less about that. I genuinely don't care that they're somehow correlated. What I care about is that the template showed up almost exactly the same. It was the same exact template, except oil continued to break out and the CAD went down. Let's analyze. Let's compare and contrast why. Why did this happen? So looking at the CAD 1-hour chart, and then looking at oil, opening range and initial balance. CAD has broke out of opening range and initial balance, and they are just resting on top. Over here on oil, they have broke out and they are resting on top of the opening range. We do have the initial balance high. They are not resting on top of both, so that's a little bit of a difference between the two. But let's frame the day, because that is where not only the structure has changed over here differently, but also when you frame the day, it becomes a lot more clear. So let's look at CAD first. They made a higher high, and then they made a lower low on Thursday. That could be a dead giveaway to look for a pump and then a dump. So we have that lower low back down on the inside, and then on this right here, you can see session 1, push 2 in London, push 3 in New York. Now, we can also frame the day. Let me zoom in. The Asian range creates the opening range for the day. London breaks out. 1, 2, 3 in the final leg. So this is leg 1, right? Leg 2 and leg 3. in that final leg to the high, to the initial balance high for the day, they not only trigger the previous day's high, but the breakout of the initial balance also fails inside of the New York session. After a 1, 2, 3, after 1, 2, 3, after the lower low on the inside, that is my belief of why the CAD went down. It was screaming that it wanted to go down. And it was showing all of the signs and symptoms that is what the setup was. However, let's take a look at oil, compare and contrast a little bit. Uh-oh. Let's see if I can get this. Can I move it? Is it going to let me move it? Uh-oh. Hold on. Yeah, wouldn't be a Pips to Profit stream without a little technical difficulty. Let's see here. There we go. So now looking at oil, what is different? There is no lower low on the inside, number one. We have a higher high formed on Wednesday. That creates this as the structural low. This was the high. So there is no lower low on the inside. They are working the high of the opening range in 3 pushes. On the day, on Friday, what happens? There's the opening range for the day, and they spike both sides. They spike down first, stop hunt low in London, and the breakout of that succeeds. They also break out of the initial balance high in London on the day and of the week. Coming into the New York session, they break out of the previous day's high, and it continues to go higher. There's a parabolic channel forming even on a 1-hour chart. Coming down. So, first, before I continue on, why is this significant? This is a very different scenario. And I'm talking about the scenario, not the candles. I'm talking about the fact that the opening range for the day is succeeding in their breakouts. The initial balance for the week, the breakout is succeeding. Compared to compared to the CAD, where we have a lower low on the inside, 3 drives back up into the high of the week, 3 sessions of rise, ending in a 1, 2, 3 to the high. Opening range and initial balance has failed at the beginning or kind of towards the end of New York. Very different scenario. So let's come down. Let's take a look at the CAD. Now, like I said, this is the CAD 1-hour chart. I've got some details up there, and I'm going to fix this again so everybody can see properly. There we go. Yeah. Everybody see that okay? For the most part. All right. So CAD 1-hour chart. Looks pretty good, right? Just like we said, lower low on the inside, break in structure, break of structure. We had a higher high here and then a lower low over here, break in, break of structure, right? So we've got lower lows on the inside. After this lower low, this is my high, this is my low. They pump it back up. Push 1, push 2, push 3, ending in that 1, 2, 3. But how do I know up here that the initial balance for the day is going to fail? I don't know. I'm waiting for signs and symptoms with that idea in mind. So looking at the 1-minute chart, you can see the higher high gets formed right here. And then this is the second hour as well, right? So this is a higher high, a head and shoulders at the high of the day. They break that neckline coming into the 3rd hour. This is the 3rd hour opening up. That was the news. The news breaks structure to the downside, makes a lower low, and they pump it back up, push 1, push 2, push 3. There's that exact same pattern that we saw on the euro, the exact same pattern that we saw on gold. There's the shortened M, up, down, up, and the engulfment also being a descending triangle for entry, and follow-on descending triangles for follow-on entry if you maybe missed the first one. So that is a great entry opportunity on the US dollar CAD. Now, I don't have anything for oil. We're going to go to the actual live charts on oil to look at follow-on opportunities, but I want to take a pause. I want to take a second and ask you all, do you see where I'm going with this as far as the opening range and initial balance? The mindset is the most important thing. The levels are always the same. It's always going to be Asia range, opening range, London, initial balance. Those are the levels. It's always going to be Monday, Tuesday, opening range, initial balance for the week. And it's our job to decide, is the breakout succeeding or is it failing? My way of doing that tips and tricks slide, and then using the day, framing the day, and looking at where volume could be trapped, not necessarily stating for a fact that it is, but then going and looking at signs and symptoms of why I am looking to take that trade. Where would your initial target be for US dollar CAD? There's going to be multiple ways you can do that. All right. Number one, you could measure this up. In fact, you know what? Let me get to a live chart. Have I already pulled one up? I have. No, I haven't. Naughty, naughty. I had one pulled up. I don't know what happened to it. Here we go. All right, get this pulled up so that way you all can see. Oh, there's my face. It's there. It's in the way. Let's go down to the CAD. All right, so Asia range. So you're asking about targets. There's multiple ways you can do this. Number one, context is always very important. You could have targeted, this is an inside day. They've triggered the high of the inside bar. We've got stops down low. Now, they didn't hit that. So maybe you don't want to wait that long, right? Maybe you're just like, hey, I'm just going to get to the end of the session. I'm going to close. What is something else that you could use? You could use maybe the 100 pip box. All right, we've put in peak formations kind of up at double zeros. You could target other 25 pip extensions or other portions of the box. Let's see, this is a bit dim. Let me get these brighter because I'm having a hard time seeing. There we go. So this is a 25 pip move. This is about 50 pips down. So you could target the 25 pip box extensions. This is US dollar CAD. It doesn't move nearly as much. So maybe, 25, 50 pips is plenty. You could use that as well. What I like to do in a lot of cases, because everything is timed and measured, is I will identify a consolidation. So you could say, hey, this is the, opening range initial balance. The initial balance has failed. This is a consolidation. Maybe I want to measure this. Something like this. You could use that as a measurement. Maybe you might want to just use the opening or the session consolidation, right? We had a low, high of the session. You could use that as a target. It's really up to you. But if you're going to use range expansion, find a consolidation that you like. You could even use the breakout, the pullback, right? You could use this part right here. So like this part of the consolidation, and you're getting in from either end of this. There we go. I'm deleting that. This is annoying me. So you could use this consolidation here, right? So you can do full expansions of just this consolidation. But if you're going to use range expansion, identify consolidation and use that as your measurement. You can do that. Depending on the context of the market, you could look for the other end of the range using previous days high and low, especially in strong moving days. If there's stops down low, a lot of times they will come back and get those. That could be a thing as well. You can also use, like I said, the 25 pip box to identify those take profit levels as well. So we've got, if I would have gone in up here, there's a 25 pip box line there. And then there's another one down here, which looks like that's where they went to. They put in a peak formation at that level. Probably a good time to get out. Those are some of the ways that I like to take profits, Jamie. Let's see. Nathan. So Asia sets the range. London looks to break. Yes. London is New York is either going to be a continuation or a reversal of London. Nathan. You want to learn this concept? Where should you start? You can watch my playlist, Watch in Order for Effective Learning. You can go to Stacey Burke's channel and watch his as well. Those are both good places to start. He's got a playlist in order. I've got a playlist in order. Whichever teaching style suits you best, all the information's there. Good stuff. All right, so let's go to oil. Remember, I was comparing, contrasting oil to the US dollar CAD. Am I Stacey Burke's son? No. My last name is not Burke. That's a really funny question. I don't think I've ever been asked that in my life, but that'd be hilarious. Let's see here. Man, that one, I have never been asked that. That really threw me off. That was the funniest thing I think I've ever been asked on live stream. Where am I based? I'm on the East. Oh, okay. I'm on the East Coast of the United States. All right, so comparing and contrasting oil. Oil, we had the opening range breakout, the same exact template, except we weren't resting on top of initial balance high. We were underneath that. But the framing of the day on the day itself was very different. London breaks out and continues to break out in the gap time. We've also broke out of previous day's high. So my question to myself would be, is the breakout going to fail, or is it going to succeed? Or, maybe we're doing a range expansion once again of a consolidation to the upside. Let's go down to the 1 minute chart and try and figure that out. I've got the levels up there, and I've got price to determine. Now, if we're looking at this 1 minute chart, let's divide it up. 9 o'clock. If I can scoot my mouse over just one click, there we go. And I think the 10 o'clock news was somewhere over here. Now, I think there's a very sound argument to be made that this could have gone back down. Why? Well, first hour, we have a consolidation. High, they put in a higher high. Then they came down in the second hour and made a lower low. Back down on the inside. They even traded back into the high in 3 pushes, and there was an M prior to the news. So do I trade prior to the news? No, I do not. However, this is the news, and they've pumped it back up without breaking the low in 3 pushes. Push 1, push 2, push 3, up, down, up, and then that engulfment of the neckline. So if you took this short, I think it's valid. 110%, I think this is valid. However, when it comes down and breaks the low and immediately reverses back up, now you're in a problem because the breakout of London has not failed. We're in a range, and they've gone vertical back up. You better have a tight stop. That's why I put my stop so tight, and I get to break even as fast as I can. Push 1, push 2. So I usually use push 2 as my opportunity to put my stop, because if my common belief is that there are stops above push 2 or traps above push 2, and I've got my profit target wherever. Once they go lower and I get, 15, 20, 25 pips in profit, I'm going to break even. All right, that's a part of my trading plan. That's how I do it every single time. So if you took this trade, that's why I like to keep my stops as tight as I can. But once the breakout of initial balance for the day does not fail, and they put in a peak formation and go higher, they've just put in a peak formation at 75, breakout, pullback, continuation. Whew. Especially once they engulfed that 10 o'clock. Look at this. You can't make this stuff up. Like 10 o'clock, the opening price. Look what candle is the candle that completes the pattern, right? The one that drove the market into completion. They engulfed that 10 o'clock time. They've got people shorting into the low. Would have been me included if I was watching oil, because I would have taken this trade. I almost guarantee with 100% certainty I would have taken this trade. But keep those stops tight. Make sure you have a good risk management plan. They put in a peak formation at 75, and they're going higher. If you're in short on this, I would be really considering. They put in a peak formation at 75 to go back up. They're going back to the high. Why would I not just close the trade, maybe slightly in profit or at break even? Yeah. Don't be so overconfident in your abilities. You're so sure that you're right. Look at the chart, and what is it telling you? Come into it with an open mind, all right? So as of right now, we've gone over oil. We've gone over the US CAD. We have gone over gold, EURUSD. I think we need to go over a few more. Let's take a look. Let's take a look at the templates. What has happened throughout this week? Ackman, it got you. Ackman, it gets you at break even. Were you fast enough? Hey, Patrick, that's a fantastic question. Patrick asked, can you still trade Forex in the U.S.? I heard something about regulations, many guys going to trade futures. I am one of them. I am now a futures trader. Yes, the U.S. regulations, I was kind of dipping and dodging, bobbing and weaving, kind of just going from broker to broker to get away from it. And, the writing was on the walls, and they finally have made it impossible to trade Forex. So I have gone to futures. I'm using Tradeovate, and I'm going to be doing Top Step. And so far, the transition has been absolutely seamless. over on futures, you can still trade currencies. Like I traded the euro futures, and that's how I traded, Euro USD. Gold futures, oil futures. The chart looks exactly the same. It's just you're trading futures. You have to trade contracts instead of lot sizes. My biggest adjustment right now is the contracts. The contracts has been my most difficult adjustment because I cannot size the same. I cannot scale out the same. So I'm adjusting to that right now. My Euro USD trade, I was able to get a few contracts on there safely. And that's the most that I put on there so far. But I don't want to rush myself into, loading up contracts and then that turns into something bad. So as of right now, I'm just being very conservative and, getting my footing with the whole contracts thing. Also, all of you here listening right now, this actually is a very good question and probably a good teaching point as well. If one of you has a good answer for me, is there a way? Because I'm being forced to trade on TradingView right now, and one of the problems that I'm running into is, let's say I enter in one contract here, and then it comes up, and I enter a second contract, and then maybe even a third contract. All right. So I've entered in with 3 contracts. Let's say that the market comes up and I want to take off either 1 or 2 contracts. Is there a way through TradingView that I am capable of choosing which contracts to take off? Like, let's say I want to take off this contract here and this contract here so I can leave my weight down low. Do you all know of a way that I could do so? I want to leave my weight down here, but what keeps happening to me is every time I go to remove contracts, it'll remove all of my weight down low and then leave this one, and it'll bring my average all the way up, which is infuriating. I don't want to do that. They are setting me up for failure if that keeps happening. Do you all know of a way to do it the other way? I don't want to trade minis and micros. I'm going in full contract. It'll take you out in the end. So, yes. All right, very well. I'll have to adjust with that. Okay, let's move on. So before with my with Forex, what I would do is I would enter, and I would enter, and I would enter, and then it would do whatever it's going to do. But whenever I would scale out of a winning position, I would just use my magic keys. And then I would basically be able to do 50% of all lot sizes. We've lost audio. Can you all hear me now? Can we get Wise in the chat if you can still hear me? Because I unplugged it and plugged it back in, so... All right, fantastic. Hey, so I can't use magic keys anymore because it's only for MetaTrader. MetaTrader's been banned in the US, sort of, in a way. So I can't use my magic keys anymore, and I'm just trading right on TradingView. But when I was trading Forex, what I would do is I would enter in with a lot or 2 lots or 3 lots or 4 lots, whatever. And then as the market was climbing, I was adding in smaller size from my initial base entry to keep my average as low as possible. And then when it would go vertical, what I would do is I could just close a button, close half, close full, close partials like 25%, and it would remove equally 25% of all of those positions. So like if I was in 5 lots here versus 2.5 lots and then like 1 lot, it would be... it would put me down to 2.5 lots from 5. You know, if I was in 1.5 here, it'd put me down to like whatever, right? It would move it all equally. I would suggest a giveaway for the magic keys. What, y'all want mine? My magic keys? That'd be funny. How am I able to trade gold if I'm in the US? Gold futures. You could trade gold futures in the US. or Owanda, just because you want to trade, not crypto, oh goodness. If you want to just trade like Forex and you use forex.com and stuff like that, good luck. Your spread is going to be huge, massive. Like, it's embarrassing, really, that a company would be willing to do that. And I'm going to get yelled at, I'm sure, by whoever. But the spread is impossible. They are setting you up to be a non-profitable trader with a spread that big. All right, so I need to move on. Let's go to US Swiss. Let's take a look at the template for this week and what has happened. All right, so this is actually very similar to what we saw on kind of gold, but on Thursday, right? So EURUSD, we had a failed breakout on Thursday, and then they've closed on the outside of the opening range on Thursday. So there's a failed breakout down low. The breakout failed Asia London. Breakout pullback, New York continuation back up through the high. So that was a trade on Thursday. And then looking at the opening range initial balance for the day. And then coming into the New York session, let's go down to the lower time frame and take a look. So once that level gets triggered, right? What is the behavior of price? Making higher highs and higher lows coming into the news, right? I think this is the news right here. They make a higher high. This is my low. 10 o'clock, break structure back down to the downside. My opening range initial balance level is up top. You can see physically where people are caught now trying to go long into the high. We've got a bit of a push 1 and 2 and then 3 into the high. This one candle, if I went long anywhere up here, that one candle alone has just put me in drawdown. So thinking about the psychology of everything that is happening, and then we have a bit of a 3 push pattern back up, an opportunity for entry where they broke down, up, down, the engulfment down. You could have got in there. With the understanding that we've got volume caught up top, the initial balance is failing, and I can trade this. This is actually a setup that I look for, looking for 3 sessions outside of a breakout, and then my target is always going to be this level right here. So wherever that broke out of, once I have 3 sessions or 3 drives outside of a previous day's level, when it fades or when it rolls over back down, that is my target for that trade. And then sometimes, and a lot of times, they will fail and keep going, but I don't care. Usually I'll just use that as a target. All right, so let's look at the criteria for this entry. Higher highs and higher lows. 1 minute chart breaks down, makes a lower low. Then you get a M or a W. The M or a W. In this case, it's an M. And then the engulfment back down. And I don't know how much, this is a very non-volatile pair. So if I had push 1, push 2, so I'm probably going to put it somewhere up in here. As far as profit target goes, about 20 pips on this pair. That's actually pretty good. Your risk is very small, 10 pips for about 20. That's not bad, especially on this pair. What about using... Actually, there's a heart in the way because YouTube puts this heart thing there and I can't see. Trade as an alternative for MT5. I don't know what you're asking me, Trading Hub. What about using DX? What is DX? All right, Euro JPY, 1 hour chart. Let's take a look at the opening range and initial balance for the week. All right, very consolidated. So this is one that the breakout failed. Opening range initial balance. They were working the high, and you can see that over here, they broke out, they pulled back, and there's been no continuation at all. This was actually an inside session where they have traded completely on the inside of the previous session. Which is less than ideal. So New York, not so much. It looks like there might have been a good trade, sort of a good trade in London, but for the most part, not really the best. I don't know about real setups for that pair. We can look at US dollar, Japanese yen. This is one that I've been avoiding all week long, and if you remember from my live streams earlier this week, they had created this huge range, and I've been avoiding this pair because they've just been consolidating, whipping it back and forth. This is a huge trading range. If you've ever heard me say anything about trading ranges, I do not like them. So I've avoided this pair all week long. Okay. All right. So I've gone through most of the pairs this week. US dollar, Japanese yen. Yep. All right, so this is... Ow, I didn't look at the NASDAQ. Failed breakout at the low of the week. Breakout pullback. So if we're looking, again, to look at the opening range and think about, hey, is this breakout going to fail or is it going to succeed? They've made a higher high, right? Higher high. They pulled back. Back down to the opening range high. And then you frame your day. Asia coming into New York, the breakout of Asia's low has already failed. And then all we have for reference is to go back to the high. So let's go down to the lower time frame and take a look at what that looked like down at that level. Okay, so here it is again. There's that template that just keeps showing up over and over again. If we remember going back to the beginning of this stream, did I close it? Please say no. There it is. Yeah, and there it is. Spiking the high, spiking the low, pulling back on the inside. We come down and we look at the consolidations for multiple different pairs this week. Spiking the high, spiking the low, and pulling back inside. Spiking the high and the low, going vertical, right? So it's the same, spiking the high, spiking the low, pulling back inside for that trend trade. That pattern shows up over and over and over again. So here we go. For the entire day, they have spiked the high, and then they have spiked the low. Peak formation high, peak formation low. They've pulled back inside. And then within the session itself, if you were waiting for after, 9:30, after 10 o'clock for that news, let's figure out, was there an opportunity? They've made a higher high, which is good. Higher high, I know to look for 3 pushes back down into the low. So this is my low. They broke out, push, and push, and push down into the low, decent or ascending triangle, back up. Same exact pattern that we've looked at on all those other pairs. Breaks out, makes another higher high. I know to look for 3 pushes back down into the low. This is my low. They push back down, push 1, 2, and a weak third. This is a, if you look at it from this perspective, down. So this is the left shoulder. This is the head. That is the right shoulder. It's a micro head and shoulders to continue the trend. Is this 10 o'clock? Yes, it is. So 10 o'clock opens up. They spike back down into the low and then give you entry opportunities coming into in the third hour and also towards the end of the session as well. You can see that the continuation of the trend, they made a higher high here. So this is my low down here. There has been no breaks in structure to the downside. Absolutely no reason for me to go short. The only thing that this is doing is continuing to go long. It's a range expansion of the entire week's range. Breakout, pullback, and a continuation sort of template for the week. All right, 2 full expansions is what we got. Actually, I think that was 3. 3 full expansions for this week. Isn't for the NASDAQ a first green day or just a failed... This could be a first green day, but usually I won't count a first green day if it closes at the high of the week. But aside from that, right, if just discount first red, first green, don't worry about any of that. Did the breakout succeed? Is it going to continue to succeed tomorrow, or will it fail? And we're looking for signs and symptoms on the day, and this is how we do it. All right. How many people we have in here right now? About 59 of you? Good stuff. Hey, so this is, I've gone through all the pairs. I've gone through kind of the teaching moment that I wanted to. How y'all feeling at the end of this? Has this helped at all? Has this been beneficial to your studying process? Give you something to go back and look for? Let me know. Maybe like the stream. That'll let me know to continue to do these kind of in the future. Let's see. Regarding your Friday EURUSD trade, I thought whenever we trade from the inside... We weren't trading from the inside, Ackman. They had already gone to the outside, and it was that third peak to the low. Think of it like, see, notice how they've gone to the outside, and we've gone to the outside of the opening range. We were on the outside. Ackman. Does that kind of bring it more into perspective? We're not on the outside of the previous day's range, no, but we are on the outside of the opening range for the week. We'll need to start looking at my Yeah, the 1 hour chart really brings things up in perspective. Great stream. I learned a lot. Good. I'm going to continue to do these then more often. Ladies and gentlemen, this has been a fantastic stream. I greatly appreciate you all being here. If you all have not joined the Discord already, it's free. All the content over there is free. There are so many great traders over there that have emerged and are helping one another, which is exactly why I made that Discord, was to bring a doing well are really being verbal about it. They are showing others that they are what they are doing, and they are helping those who need it, which is fantastic. I also do the same. I share all my trades over there. Good stuff. Hey, so what I'm going to do is I'm going to take this slideshow. I'm going to put the link down in the description below to the slideshow. It's free. You can go over to the slideshow. You click on File. You click on Download. And then you click on Download as a PDF. And it's yours forever. I really appreciate you all tuning in. But I'm going to end the stream here. You'll have a great rest of your weekend. Rest, recuperate. Hopefully get some good studying in. Maybe refer back to this video. Maybe refer back to some of my other live streams or my other videos and things like that. You all have a great rest of your weekend. Bye-bye. Thank you, Sarge. Goodness gracious.